Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. Rocket Lab isn't just that, fascinating small cap space company anymore.
No, not at all. It feels like they're in the middle of a full-scale transition.
Exactly. What we're really seeing is this picture of just record financial performance.
And all of that performance is directly funding this huge, high-stakes, high-reward pivot into the medium lift market.
It's like two companies running at the same time, really. We have to start with that foundational business.
Right. And the Q3 2025 results, they were exceptional.
They really were. The top-line performance didn't just meet expectations. It sort of set a whole new baseline for what they can do.
The numbers definitely jumped off the page for me. They reported a record revenue of, $155.1 million in Q3?
Yeah, which is a massive 48% increase year over year.
And for anyone tracking this space, a 48% year-over-year growth rate is, it's explosive. It just suggests huge market share capture.
It does, and that's clearly why management felt so confident raising the full-year guidance. Now they're expecting between $720 and $740 million.
But growth is only ever half the story, isn't it?
Right. The really transformative part here is the profitability. For the first time, this growth is becoming, demonstrably profitable. Gross margins hit an all-time high of 37% on a GAAP basis.
And that move to 37% GAAP. That's the number investors should really be focusing on.
It is, because that shift signals much better cost leverage and scale. If you look back, they were consistently in the mid-20s.
But this isn't just a small bump.
No, it's a huge jump. It shows efficiency in launch, but also that their revenue mix is changing towards those higher margin space systems components. They're selling more of the lucrative parts.
And that leads to financial firepower. Right? The future visibility they have is just incredible.
A massive $1.1 billion order backlog to close the quarter.
And analysts expect more than half of that to turn into revenue in the next year.
About 57% in the next 12 months, yeah. That billion-dollar figure. It's not just a number, it's a powerful buffer. It de-risks their near-term execution.
Which lets them focus on the big long-term project.
Exactly. And that near-term security is what lets them be so aggressive with their capital. Their balance sheet is strong. They've got a net cash position of $145.6 million.
And overall liquidity is over $1 billion.
Right. And that liquidity is critical because they are pouring money into R&D and infrastructure.
But they're funding it with internal cash flow. And that's the major milestone here, isn't it?
It is. This is the big one. For the first time since going public, Rocket Lab achieved a sustained period of positive operating cash flow.
$48 million for the first 9 months of 2025.
And when operating cash flow turns positive, it means the core business is finally self-sustaining. It's paying its own bills and starting to fund its own growth. That's a huge psychological shift for the market.
Okay, so let's unpack that growth. What really separates Rocket Lab from all the other space startups out there?
It's their strategic choice. It's the vertical integration, moving beyond just being a launch service into that full end-to-end space company model. That, I think, is their real competitive moat.
I completely agree. Vertical integration. It means they control everything.
From the satellite components themselves, the reaction wheels, the solar panels, to the vehicle that actually puts it into orbit.
And that space system segment is actually the faster growing part of the business, driving those margins we just talked about.
It is. The Geost acquisition back in August 2025 was key. It added these specialized high-demand capabilities and space-based sensors that really strengthened their footprint with high-value government customers.
And they keep getting validation for that part of the business. Look at the recent win from the Canadian Space Agency.
Almost $1 million Canadian dollars in R&D funding for a new satellite reaction wheel.
That's not just a small contract, though. It's a major stamp of approval on their component tech, proving it's reliable enough for these high-profile government satellites.
So Space Systems gives them the margins and the moat. But the workhorse that keeps the lights on is still the launch business.
Of course. The Electron vehicle just keeps setting records. 17 launch contracts in Q3 alone.
And they're on track to complete 19 Electron launches this year, up from 16 last year. That just shows their operational cadence is strong. They can deliver.
But this is where the story gets more challenging, right? The engine of their future growth is Neutron.
The Neutron rocket, yes. This medium-lift reusable vehicle is the key. It's what unlocks the next decade of revenue for them.
Opening them up to those massive government and constellation contracts that are, currently dominated by players like SpaceX.
But that pivot comes with huge risk and cost. You're right to point that out.
I mean, they're entering a market that's already incredibly competitive. How do they avoid getting crushed on price or timeline?
That is the central tension of the stock right now. Neutron is the biggest value driver, but it's also, without a doubt, the biggest drag on their current earnings.
And that's why, despite those great gross margins, their EBIT margins are still negative.
Exactly. They are in heavy, heavy investment mode, spending huge amounts of capital on Neutron's first stage, the engine testing, the infrastructure in Virginia.
Which is why free cash flow is still negative. They're reinvesting everything.
Everything. The market is accepting it for now because they see the path. They see the potential for dominance if Neutron succeeds, but it's the critical risk factor to watch.
But they are hitting milestones, which helps to de-risk that investment. The Hungry Hippo fairing is a perfect example.
A huge de-risking event.
So for those who don't know, this is their unique jaw-like fairing that's designed to stay attached to the first stage instead of separating.
Right, so the whole thing lands together, which makes reusability much faster. The news that it was fully qualified and shipped to Virginia, that suggests they are right on track for their Q1 2026 launch target.
It proves a core, unique part of their reusability concept actually works, a massive sentiment driver.
Definitely.
Okay, so let's shift to how the market is reacting to all of this.
Well, the perception is highly positive. From a technical standpoint, the stock has been trading very comfortably above both its 50-day and 200-day moving averages.
Which is that classic bullish signal, right? It shows an established uptrend. The buyers are in control.
And that momentum is not just retail-driven. Institutional ownership is high, nearing 72%.
We saw increased stake disclosures from firms like BlackRock, new buying from wealth managers like Pinnacle. That institutional conviction is there.
We also have to talk about the insider activity because it was a really interesting split signal.
Right. There were some significant stock sales by the CEO and a director.
Which is pretty normal. Often it's just sell to cover for taxes after a big run-up or for diversification.
But here's the important part.
The CEO also executed a substantial $2.1 million open market purchase in October.
And open market buys, where they use their own cash, are seen as a much stronger signal of internal confidence. It shows they think the stock is still undervalued.
Exactly. And the street consensus really reflects that optimism. Analysts are overwhelmingly bullish, setting some pretty aggressive 12-month price targets.
We're seeing consensus in the $50 to $58 range, but some firms are aiming as high as $75 or even $83.
And all of that extreme upside is driven almost entirely by plugging successful Neutron revenues into their models.
Plus, they're riding this huge wave of sector tailwinds.
Oh, absolutely. News of these incredibly high valuations in the private space sector, like the reported $800 billion for SpaceX.
That's just driving enthusiasm toward publicly listed, proven plays like Rocket Lab. It validates the whole market.
So, with all that in mind, what are the key catalysts we should be watching for in the next 3 months?
The next big event is the Q4 2025 earnings release. That should be around February 2026.
And that Q4 report is absolutely crucial. Management guided for strong revenue between 170 and 180 million.
But investors are going to be hyper-focused on one thing.
Operating EBITDA break-in, management has been targeting that for Q4. Hitting that milestone while still funding Neutron, that would be a massive catalyst.
It would confirm profitability is right around the corner.
We'll also see the institutional 13F filings due around January 20th. Those will show us if the big funds kept buying after the strong Q3.
And finally, just keep a close watch on the operational updates.
More Electron launches scheduled, like the CAST and JAXA missions in December. But most importantly, any updates on Neutron engine tests, static fires, or refined timeline for that Q1 2026 launch.
Each of those steps turns promise into reality. So what does this all mean for you, the investor?
Look, Rocket Lab has cemented its position. They have record financials, massive liquidity, and a high-margin integrated platform that is rapidly expanding.
The biggest question now is just how quickly they can convert the promise of Neutron into realized revenue.
They've proven the Electron business works. They have the cash. Now it's a race against the calendar to deliver Neutron, unlock that next level of institutional buy-in, and push the shares towards those high analyst targets.
That's right. For those looking for multi-year exposure to the commercial space economy, this is a compelling story backed by execution, but the outcome really hinges on the successful deployment of that Neutron vehicle.
Make sure you subscribe to Smart Wealth with Joshua so you don't miss our next stock analysis.